What up, everybody? This is going to be an interesting video. This is going to be a video on rejection wicks and how to use them. They're kind of like my favorite. Sometimes it just depends on what the market is showing us, why we should use it, when to use it, how to use it, and so on and so forth. There's two ways you could use this. There's this the Sentry. Let me fix this. Okay. So, here's the leg down. This also pairs very well with the secondary approach. And for those of you that know already how to use the secondary approach, would be to find an obvious leg and find price tap into some PD array. But in this case, these got invalidated. It's just a good pair. So what you want to do is always remember this. Like, I know a lot of people are gonna like look for everything and think that everything's going to be a rejection wick, in which it's not. As you can see here, invalidates it, invalidates it. There's no entry on the rejection wick here. This could have been one. Here. You would have got edged by how many points? 821. You would have got edged by like 3 points, but I mean, it's gonna happen in this market. So, anyways, we have this big move down, solid candle, and as you can see, every time a candle is being put, it's getting smaller and smaller. The only way that a rejection wick is valid is if it's tapping into something, and this is most importantly, this is the biggest highlight right here, is it has to have swept out liquidity in order for this to work. Okay, so when you're looking for a bullish entry, you want to take these fib settings and mark from the bottom of the wick, however long it is, to the start of the body on the candle. So in this case, we fib from here to here. You could use this as well. As you can see, we always wait for the CE. In some cases, like, you can get away. That's why I have the 20.25 here. If it's a small wick and we do have sweeps, you can get away with using the 0.25. There won't be that much drawdown. Let's say you entered here. You could have got away with a 20-point stop. And you could just always target some opposing liquidity here. Now these highs are this major high. The goal is to, like I said, if the wick was small here, you could have gotten away with it. But being that we prefer to use the CE and always to have a 10-point stop, this would have been a 10-point stop. Target this. What time is this? This is 2 a.m. This is pre-New York. You would have been up 300 points just off of that entry alone. Okay. So that's one. Let's find the bearish entry. To the downside. see. 4 hours sweeps out this liquidity, closes bearish on the 4 hour, and this is what I mean. You see, you have a small wick. You could have gotten away with entering on that. In this case, this is a 4 hour time frame. I wouldn't use a 10-point stop on a 4 hour. But anyways, like you get, time frame alignment. Obviously, as you guys know, it's 4 hour PD array, 15-minute execution. So you could have, found a different entry based on what we have here. And you could see another rejection right here. And you could have waited for something like that, or you could have used this would have been the tap into the rejection wick. Or no, wait, was it this? It was the 0.2. Yeah, it was this one. Okay. Here's the high. Here's the change in state of delivery. Could wait for price to close. Let's say if you didn't really trust this 25, price is going to go down just based off of this. So you could have just looked for a second entry. This is the high. This is the last low in this leg of that took out highs. Price closes below. You wait for the retest. You could have targeted these lows. You could have targeted this imbalance. Yeah, this. Yep, you could have targeted the C of this. It's 300 points. You could have got away with a 20-point stop. This wouldn't have been our entry. This is our entry anyways. Let me see if I can, boom. There you go. But because we have stack generated liquidity up here, I would do 20 points just to give myself some room. Okay. Let's go back to the 4 hour. Look for another example. Oh, we have a devil's mark right here. Price comes, reversal point, back down. I made a video on that. I just like marking them out. Was this the same one? I think this was the same entry. Yeah. No, we did this one already, right? Yeah. Okay, let's go back in time. Let's pick a random. Boom. Price gets swept. We close bullish. We take out a form of liquidity. Boom. Get on the 2.5. Short wick. Found them. Let's see, when was this? August, 6 p.m. That was the 4 hour. We could have just went to the I don't have data for that. Yeah, I don't the data for that. Let's see, August 4th. Yep. Alright. I do have the data. What am I saying? Either way, same entry. Yep. Boom. 0.25. You can leave yourself some room. Put a 20-point stop. Target a previous day high if you wanted to. Targeted this imbalance. See how this plays out. Boom. I think this continues higher. That was a 4-hour. Okay. Let's find another one. Let's go to higher time frame. Boom. Liquidity swept here. Rejects. Price opens up. Taps into the CE, the 50% mark of that wick. 10-point stop. Target these highs. This swing point. These swing points right here. And you have 333 points. It just depends on what time this was as well. Oh, this is perfect. This was a New York AM session. You could have gotten out right here, this side, for the whole session. You would have been good. That's literally, you would have got out in 3 hours and made 248 points. Let's find another one. These are kind of weird here. You have to go to the 4-hour. Yeah, let me see something. Okay. This is another approach. This would be your golden entry for higher wicks. This is the rejection. It swept out this. We have these this generated liquidity below it. See, like if we would have used this instead, we would have thought to get in around here and we would have got taken out. This is another approach. Price has to hit the 706 area. That would be our golden entry. This is just a part 2 to that. We could have entered on this 706. As you see, we would have thought that this was our original. This is for when you have generated liquidity, like when you have like stacked. You obviously have this candle closure here. I mean, there's a way you could have entered off of this as well. Like it's fine, but I mean, whatever. We have this stacked liquidity underneath it. And we sweep it out, and we go down. You could have entered on this. Right. Oops. 10-point stop. You could have targeted this imbalance. You could have targeted this low. I mean, this move happened at 1 p.m. So I mean, you would even if you just targeted this low here. What time is this? 6 p.m. Yeah, even if you just wanted to get out like a quick scalp, you could have just targeted this low. It's still 70 points. But anyways, let's find another one. Right here. Liquidity is swept. What do we have? We have an entry. Also, this is just another tip. This happens. So the time frame alignment for the 1 hour is the 5 minutes. So if you were wondering which one you should use, obviously on a smaller time frame, it's just to find the bar right now and go all the way back here to. I don't think there's enough data for me to go back this far, but on the 5 minute you'll see. So like the time frame alignment, 1 hour. I'll write that in the end. But anyways, if you find one in an hour, it's a 5 minute entry. So like I know like you that's gonna be the question here is like, oh, how do we know which one to use? Well, if you went to the 5 minute, you'll see some form of maybe if you don't feel comfortable entering this, but this could be your confirmation that we're gonna go up. You could enter based off of something else. Like you could have waited for I don't know price. This is the hourly. Never mind. But look, you could wait for price. This is the last high in this series of candles that took out the liquidity. You could have waited for a candle closure above and entered back on the retest. As you can see, we retest a couple of times and shoot all the way up. But for now, let's just stick to rejections. Boom. To the CE, literally. Price taps it, sweeps out this liquidity, taps into, rejects this. Hits the CE of that. It's very simple. It's a very good. It's just very good. It just has to be something that it's rejecting along with sweeping something out. We have this low that we swept out. We have this low that we swept out, like, and then we have this PD array that it rejected clearly. So that would be like our signal would be this would be our last signal to enter and get a precise entry. Like, look, no drawdown if you entered off of the 0.5. And you just targeted these stacked highs right here. Boom. It's 300 points. 1, 2. Even if you wanted to just, I don't know, exit out this gap fill 2 p.m. So you didn't feel like holding the trade for that long or whatever. But that's still good. That one was good though, by the way. Let's do it over. Sorry. Boom. Maybe a point. It moved like a point or two past it. It's another good entry. So these things kind of happen like when you see this. Like, obviously, price was pushing down and closed bullish. We sweep out all this, and then we tap into some form of, like discount. Let's just say, right? What do we have here? Nope, we don't have anything. Okay, that's cool. We have this leg up, so price came back to rebalance that price. We were supposed to go lower. Price decided to reverse at this point. Well, what was this? 10 a.m. the previous day, and 2 p.m. the next day. Okay, let's see. This one. Boom. You have price pushed down about what? About like 20 points exactly. Yeah, about 20 points. 5 minute would have given you a better opportunity. Plus, this was too late into the day, anyways. But I mean, if you caught it, you were good because you have this crazy movement up, and that would have been substantial enough. Okay. Boom. Price hits to 25. Targeted this imbalance. Yeah, just stuff like that. They'll pop out to you the more that like you try to like figure this out. It'll make more sense to you. Boom. We sweep liquidity. Do we touch it up like we sweep over here? We sweep this. What was this? The previous day high. Yeah. Um, we sweep it. We close bearish. Boom. Get into right here. Like I said, once again, this is. Whoa. This was a good day to go short. You would have been done by 12 if you entered at 11. Holy crap. You would have been up 350 points. Cool. What do we have here? This is a side quest. Let me see something. Do we ever come back to this point? Nope. That's crazy. We never come back to that point. Oh wait. Whatever, I'll leave that there for now. I just want to see something. Sometimes we won't get any entries. Just depends on what the market's doing. Boom. 10 a.m. This was literally the whole trading day. Just off of an entry like that. This is a theory I'm testing out. If this works for, yeah, straight to with longer wicks. The, these are the settings right here for longer wicks, like long wicks like that, obviously. And you want to wait for the golden entry. They just got to be like stupid, like really like longer than like the ones that we've been like trying to use. Let's see. Yep, 0.5. I know you're probably wondering, well, what about this? I mean, this was like a obvious impulsive liquidity. It got swept out and tapped into this last bullish leg before all this price movement up. Taps to 0.5, shoots up. You know, just something very simple. Something else that we could use. Let me see something. Let me see. A long wick like this. Yep. 706. Boom. Shoots up. Please remember, guys, like it has to sweep some form of liquidity before tapping into whatever you think it is a rejection wick. See, this would have gotten validated. You would have gotten taken out if you had a 10-point stop. Let's just say it's got to be like it's got to stand out to you, like, and it has to, like I said, it has to sweep of some form of liquidity. Yeah, I mean, with a 20-point stop, you would have gotten away, but I mean, ideally, you want to be at the golden zone. Like, it doesn't, it doesn't invalidate it that it went to 709. It's still part of the expansion, but you want to, like, your entry wants to be based off of the 706. Okay, let's find one more. That'll be it for this. Mm-mm. This is this is not, it's not a long wick, so it's just between switching between the two. 0.5. It swept this. It tapped into this order block. See. Yeah, let's go for this. Time frame alignment. This also helps with um limiting how much exposure you put yourself out there for, because if you mark them out in a 4 hour, like obviously it's not gonna like look the same. What the hell just happened? Where the hell did my chart go? Okay. Yeah, it's not gonna look the same. You're gonna like obviously think that you can enter off of something like that, and it's just gonna kill you. It's gonna really mess you up. So you find one on the 4 hour, go look in the 15 minute, find an entry based off of a 15 minute like we did before. If you find one on the 1 hour, look for a 5 minute or find an entry or an execution as your entry or entry execution, whatever you want to call it. And if you kind of can use the 1 minute in this, you could use the 1 minute should be the execution based around all of this. But on a 4 hour, 15 minutes, it's gonna obviously hold up stronger than a 1 minute would. You're just gonna get whipped out and wicked out. But yeah, 5 minute, 1 minute, you could use it. If you find like if you're not sure about like a 5 minute execution, you can use a 1 minute execution. That should be about it on that. You guys should be good. But Oh, also, this is very important. Liquidity must be swept first for a valid rejection wick entry to work. This is how you guys are going to be able to bottom tick the market. If you put the 8.5 along with this, that could help a lot. That'll help like bottom or top tick entries like crazy. Like if you just align everything plus the secondary, this is like this should be the completion like to like finding if you like on a if you do happen to find the max expansion on a higher time frame, this will like really help add to your like your toolbox. So this like projection wick stuff that I just put out for you guys. And liquidity must be swept first for a valid rejection wick entry to work. And if the body is small but the wick is long, use the golden entry settings. Okay, that's it, guys.